Hey everybody, and welcome back to another Monkey Business. It's your ape and mod, Sharkbait here, and hopefully we're going to have a pretty fun interview here today. By interview, panel. We're just going to have a fun little discussion here today. So from last time we had spoken on Monkey Business, we had covered a lot of interesting topics, and I feel like a lot has happened since then too. We had talked about NFTs and potentially the future of NFTs within GameStop. And this week, we're going to go into a little bit more details into what may has happened since then, as we had seen that we had 002 go into effect today. We have our T plus 21 that's coming to fruition, along with a couple different elements regarding the reverse repo market and the mortgage market for that matter as well. I'm going to have a couple of cool guests here today, including Braka, Buffarm, and a whole bunch of others. So we'll have a lot of fun here just shortly. But I wanted to introduce the co-host for today, which is Pink.
Hey guys. Thank you, Sharkbait. I'm really excited to do this with you today.
Yeah, likewise. I think it's the first formal time that we've ever been on screen together, so it's a fun little debut. But before we get started with everything, there's a couple different things that we just wanted to get off the table here. We'll address the elephant in the room, so to speak, is that we had a fair bit of conversations about brigading taking place in the last little while. I just want to go on the record here to say that Superstonk moderators and Superstonk as a group or community subreddit is highly not promoting this kind of behavior. It's not something we encourage. It's not something we want people to be doing. So if you do see it taking place, you see other people talking about going to other subs and trying to encourage them or having them look at different DD that we've written on our end, it's not something that we actively are trying to push into people's faces. So just something to keep in mind.
Absolutely. And on top of that, we're kind of aiming Satori that direction because we have been getting reports, and by reports, we've seen comments within other subs by their moderators. Nothing that I'm aware of has been brought to us directly, but we would like to encourage any moderators of any of those subs that have been experiencing that to bring us usernames, screenshots, or links so that we can get to the bottom of that. And we are actively banning users that are guilty of brigading because, as Sharkbait said, this is a zero tolerance sort of thing. This is something that can get a subreddit shut down, so we don't play around with that. So
yeah, and I mean, like on top of that, we don't really need that kind of attention, right? I feel like a lot of people have found Superstonk on their own. They're reading on their own, and so in general, we feel like if people feel like they want to go onto these deeper dives of what's potentially happening with GameStop and the broader market, they'll find us. Like they'll find the DD, right? They're going to search up a couple different elements, and it'll bring them straight to us. So we don't need to actively push, right? Just let it happen.
We've grown organically. I think we're at like 500,000 now, so I think we're doing pretty good.
That's right. Yeah. So just in regards to brigading in general, in case anybody's unfamiliar with what this is, it's just when a group of users are actively trying to target another sub or community, kind of like an invasion, so to speak. Once again, it's just not necessary. We don't need it. We don't encourage it. So just leave everybody be. But with that being said, let's go ahead and jump into the rest of the podcast here that we've got. And like I mentioned, there's a fair bit to cover. So some of those topics will be including GME completing their offering and what that might imply. So just as a friendly reminder, I am ex-GameStop analyst as well. So I actually worked at corporate. And so I kind of have an idea of what they might be trying to think. Maybe I'm totally off the mark, but at least I can give some of my opinion on this and what I had seen while I was there and what might be the direction they're going into. Another major talking point here is regards to 002. We had heard a lot about this and we've been waiting for this for quite some time. What is it that's taking place with this? And is this really going to have the impact that we think that it's going to have? We'll just share our opinions. Nothing is based in facts just yet. We don't really know. So it's just going to be purely opinion based, like I said. Then we'll bring on a couple different other guests here, but we'll bring them on before that. And we're going to talk about Ryan Cohen's tweets and maybe that they coincide with the ST plus 21 day cycle. And finally, we'll end up the conversation with housing and reverse repos.
Awesome. That sounds good.
Yeah, absolutely. So let's go ahead and bring on our guests. First, I wanted to introduce the Bullhouse group. So I've got the Indian dude, I've got Tears Are Wet, and we've got Kenna here.
Welcome.
Welcome, everybody.
Hey guys, thanks for having us.
Absolutely.
Thank you for having us.
Yeah, tears are wet, tears are sweat. You know, I've never actually figured that out.
It's all good. People say sweet all the time too, so it's all good.
So which one is it, really?
It's tears or sweat. Yeah.
Okay. That's fine by me. So for anybody who's not familiar, the Bullhouse group in general is a great Discord that has a lot of different specialists and people working in a variety of different fields, including the financial world as well as the data science world and the housing world. So you've got a lot of different people with different expertise that speak to a lot of different elements and are able to provide not necessarily advice, but their insights on the market and what they've seen. I also wanted to bring out two of our other special guests today, which is Braca and Butt Farm. So welcome, guys.
Welcome.
Good evening, guys.
Hello, hello. Let grandma go.
Yeah, that's right. So it was what? Grandma was being held hostage for 005, right?
She
had to be put back in.
And then we took her out once 005 was released, and then somebody put her back in. And I think that's where she is now. And I just feel for her,
So what are the demands now? I wonder.
I don't even know.
Probably the MOAS. They're just like,
Margin call.
Yeah, the margin call itself for sure. So welcome everybody. We're gonna have a fun time here. Ultimately, we've now gotten to the stage of all of this taking place where everybody's gone very zen, and I'm happy to see it. Of course, we know that this wasn't going to take place overnight. At least in my opinion, I feel like it is going to take a while in regards to what we've already seen. Who knows? Could be tomorrow, could be next day after that. Who knows, right? But ultimately, I feel like patience is definitely key here. We're seeing that the market is moving in really drastic directions overall. And we see that with the reverse repo market. We see that with the housing market. We see that everywhere. So ultimately, I just wanted to reiterate that once again. It's just, for apes to be patient. There's a lot of different initiatives taking place from shills on places like Superstonk and other places on social media in general. But, the strategy for us is very simple. Strategy for me specifically has been very simple for all this, which is just to buy and hold. And I think that's the reason why all of this has gone as far as it has, is because the message is so simple, right? Like it doesn't really require much. So while we're all diving through DD and we're discovering different parts of the market, the core message hasn't really ever changed, right? It's always been the same thing. So that's just something to keep in mind. So with that being said, I wanted to jump into our first topic here, which is in regards to GME completing their offering. So as we had seen, that was an offering for 5 million shares, which, of course, dilution is never a good conversation. But as we see that there is a bigger playbook that RC and the rest of the team have. So I'm curious to hear from our guests here today. Does anybody have any ideas of what they might be doing with this capital and why they might need it?
I'll add just quick. I think it's a brilliant move. Yeah, it doesn't help our MOAS situation per se, but from a business standpoint, I have a pretty strong background in business and marketing. From a business standpoint, it gives them so much flexibility, like 1.1 billion in liquid cash with no debt. Very few publicly traded companies are debt free. Very few, and very few have liquid cash. They're usually carrying a substantial amount of debt and are always trying to raise money. So what Ryan Cohen and company can do right now, basically it's limitless, as far as your imagination can go, in my opinion. And I would love them to see this NFT game. Obviously we talked about a potential dividend crypto. I really see them taking advantage of NFTs in the used game space. I really do. And maybe a partnership with Amazon, or taking advantage of the government trying to break up these big, big companies right now, and maybe picking up Twitch or another streaming platform for cheap. Who knows, right? So that's my 2 cents. I think, in my opinion, it's bullish for the long-term outlook of the company.
Yeah, absolutely. I totally agree with that.
Yeah, I could definitely see a merger or something, some kind of partnership with Amazon, since they do own Twitch, because they bought them a couple years ago. And so, and Amazon doesn't have technically a gaming aspect yet. And so to bring in GameStop and kind of provide that sector into the business model could get kind of dangerous, having a monopoly on different facets of the industry. But I mean, it'd be a smart move for Amazon in that sense, since they don't have it yet and they already have Twitch. So
I'd like to just piggyback off of what my teammates just said and just sort of, put it in perspective, the companies that.
Sorry, and dude, I think you're coming up a little bit quiet.
Can you guys?
Does everybody else hear him okay, or is it just on my end?
You're a little muffled, yeah.
Is it still muffled?
Sorry, just 1 second here, guys. But I totally agree with that, right? Like we do see a lot of this capital flowing through, and it's a very bullish sign from our perspective here, which is that they're able to do a lot with this money. If there is this conversation about a crypto dividend, it gives them money to be able to execute that, right? So I don't know how somebody can look at this and have a negative sentiment against it. Does anybody have any other opinion on that?
I did actually see. Oh, sorry. I didn't mean to cut somebody off. I did see like the idea that they have the NFTs where they could actually allow people to sell their digital copies of their games because they're turning those into NFTs. I think that's a brilliant idea in the sense that, I mean, we don't have that same idea anymore of going into GameStop and really selling our games anymore. It kind of gives that back to people if they, if they're just tired of the copy or whatever they're doing and they didn't like it, they can just sell it off like we've always done for decades now. So that was a pretty brilliant idea to how to reinvent that whole process.
Yeah, I totally agree. Pink, did you want to add something to that?
Just from a layman's perspective, this puts the bankruptcy argument to rest, which has been kind of the mainstream argument all along, was that GameStop was bordering on bankruptcy and the dying brick and mortar retail front. That whole thing has been put to rest with having, what is it, almost $2 billion now in free capital. So to do whatever the vision is with. So that it just from a basic perspective, being able to argue that whenever you're arguing the DD or presenting the DD, I should say, to someone who's not familiar with it, that's a really great starting point, I think.
Absolutely. I do want to point out, back when, at least when I was there, which would have been a couple of years ago. So this is before Ryan Cohen and everything else. I remember that being a really big conversation back then, which was, how was the business going to pivot? And I alluded to some of this back in the first Monkey business, but I'll reiterate it here again, because I think it's important to know what was taking place and what might be taking place now. So back then, I remember, there was a time frame where GameStop was kind of like public enemy number one. And I think a lot of people who are on Reddit or gamers in general kind of know that there was a whole bunch of memes about GameStop, a couple of years back, which was that GameStop, you had bad trade-in values and people were kind of growing this like negative sentiment against the brand in a way. And it was unfortunate because I was there when it was happening, and but regardless of that sentiment, the core business was still this like 18 to 34 male demographic. And that never changed. That was still like 80% of the entire audience. But for some reason, the GameStop corporate side of things, like the executive team, they really started taking that personally. Like they really started focusing in on like, wow, like our entire core demographic is starting to dislike us. They're creating jokes about all of these different elements. Should we be starting to consider focusing on a different demographic? Right. So, of course, another really large proportion of that is games going digital, which was never pretty because that directly contended with the business that GameStop was trying to run, which is selling physical copies. But then we had a whole bunch of consoles that were coming out that were like digital only. Like, for example, right now you can buy a PS5 or an Xbox and have it just be digital only with no discs. And so all of a sudden it started creating some problems. So GameStop started thinking to themselves, being like, well, if they're not going to work with us, then we shouldn't try to cater to them at all anymore, or a lot less, I should say. So they started going after this parental segment instead. They're like, well, if somebody walks in, they want to become the next kind of like Toys R Us in a way, is that their kid's going to want Minecraft merchandise, for example, or Minecraft t-shirt. And so they started really honing in on this loot category. And there was a couple of good reasons for it. One of which was that the margins on it were a lot higher. I couldn't deny them that. Of course, if they're making more money on these products, we might as well go after it. But whereas, like, for example, like, I don't know if a lot of people know this, but a brand new console, like a PS5, for example, is something like a 3% margin, right? Compare that to like a Funko, right? A Funko is like 35% margin, right? So like they're making pretty much as much money on that Funko as they are on a PS5, right? Which is kind of a funny concept to think about, but it's the reality, right? Like they have to focus on what's going to make them money and where they feel the business is going to go. But since Ryan Cohen taking over and starting to change things, there's a couple key pivotal things that I had seen, which is one, kind of this focus to going back to the core demographic, similar to what it was before. So he's seeing all of us, right? He's seeing like that 18 to 34 demographic, and he's just driving right in. He's like, these people are going to help us keep our business alive. They love the products, and so why wouldn't we cater to them, right? Now, add in on top of that the e-commerce piece, and yeah, you've got the perfect storm, right? Like it looks like it's going to be a really strong contender. And that's not even including like the NFTs and any other futuristic thinking that they might be trying to pull together. So I'm really bullish for the future. I think it's like this money that they now have, this offering they completed, it allows them to complete this vision, right?
Shark, I actually want to agree with you.
Yeah.
Because as we know, Fry's Electronics, they went under, right? That was a company
Yes.
that we all kind of went to for our gaming PC parts and whatnots. And we're seeing that GameStop is actually starting to carry those gaming PCs. They're starting to kind of turn towards the gaming PC world as well as the consoles. And I think that's a brilliant market for them to get into, because there are so many people that are, I've played on console my whole life, but now I have a custom built computer that I built myself. So I don't have Fry's. Well, GameStop, if they start carrying my PC parts, because I also don't have Micro Center, so GameStop's everywhere. So it is actually a brilliant way to do it, because I've also seen, what is it, in Oklahoma, that they're setting up LAN party areas. So they're really playing on the nostalgia too. So I think they've got it right on the head for the age group they're targeting.
100% agree. Yeah. Does anybody have any other thoughts?
Yeah. So aside from just what they can do with the money, which, you've always some great ideas, but now they've got a team of top executives there who can think of far better ideas what to do with the money than me. But we just think about, 2 years ago in 2019, GameStop bought back 35 million shares for about $200 million. In the last month, they sold 5 million shares for 1.1 billion. That's incredible. And in that time, short sellers bet the whole house on GameStop going bankrupt, and that is just impossible right now. 140% short interest in January, and everything we've seen these last months, the bankrupt case is well out the window now, and Ryan Cohen and his team can just do whatever they want with that money, and it's really exciting to think what might happen.
Yeah, absolutely. In regards to the outstanding shares, I totally agree, right? It's funny because you could see that they were already starting a plan of some sort. This is like back in like early 2020. I think even just at the end of 2019, if I'm not mistaken. All of a sudden you see the outstanding shares and they just plummet, right? So you can find these charts on YChart. Maybe I can provide a link. So 1 second, Red. Maybe we can show this on screen, because it is kind of crazy to see this take place. Yeah, here it is. Just 1 second here, but that's a very good point. The outstanding shares is a big piece of this, because one of the main ways to hurt a MOAS, right, or to hurt, how many shares need to be covered, like real shares, they can dilute the company, right, which is not great for people trying to play out a MOAS. But I mean, of course, with just the amount of shares that GME is diluted, I mean, in the grand scheme of things, if we know that the short interest percentage was as high as it was, these are really small figures. But yeah, thank you. So if we look at the outstanding shares, just kind of to go further on what Broca was saying, is we see that so it would have been like mid 2019. Look at those amount of outstanding shares just plummet, right? So what this means is that GameStop was actively buying out their own shares, right? Like this is crazy bullish. So for them to sell back 5 million later on when they only had to purchase them, I forget the exact price, but I think it was like $10 or something, right? It was like
$5.
Yeah, it was like dirt cheap, right? So now that they're turning back around and be like, great, so we had all these shares outstanding, we just sold them, we sold like 5 million, and we've made insane profits, right, off of that. So ultimately, we have to remember that they already started setting this up a long time ago, and for them to make some of these decisions now doesn't seem so drastic. So with that being said, I wanted to pull us into the next conversation here, which is in regards to 002. So 002 seems to have been a really hot topic for a while now. And for anybody who's not familiar, 002, I saw a kind of a good analogy on this, was that instead of your mom coming into your room and asking you to clean it every once a month, she's now checking every hour, right? And it's kind of a good way to, I think about this, because essentially what they're doing is that they're checking to see if what the different hedge funds and financial institutions have on the books doesn't make sense, or are they just trying to play hot potato, right, by flipping over assets between one another. So that kind of leads us into another conversation in regards to what we're seeing with the reverse repo rates, as well as the mortgage market and crypto. It's a bit of everything. And a lot of questions have come up in regards to, hey, like we're seeing a lot more information about these reverse repo rates. What is this exactly? And so and how does it relate to GME specifically? I think those questions are well warranted. I think that a lot of people are misconstruing what the reverse repo markets are supposed to be. It's not a direct impact on GameStop, at least in my opinion, from what I've seen. Some people try to build those correlations that like, hey, we notice that if like during these spikes, we see that there's fluctuations in price. Like maybe that's possible. I'm not exactly sure, but the correlation between the two of them isn't direct. So what I wanted to say about that is that essentially when these guys are taking out these different treasury securities from the Federal Reserve, essentially they're looking for a place to park their money. So we know that there's excess cash in the market as a whole because of SLR exemptions and a whole bunch of other things that were instated during the pandemic. And so now they're looking for a place to be able to park that money so that inflation doesn't chew away at it. Does anybody have any thoughts or opinions on that here? As to what we're seeing right now with the reverse repo market and the amount of cash out there in general?
Yeah, I can comment. Can you guys hear me?
Yes, yep.
Perfect. Yeah, I just wanted to basically add the point where the excess liquidity that is out there is basically obviously something you pointed out earlier as well as the hedge funds, I wouldn't even say the banks, trying to find where to put it. There's too much money out there. They're trying to figure out where to put the money. So the issue that seems to be advancing or getting more dangerous is we have more participants than we've had before coming into the play because they know that Federal Reserve is allowing them to print more money. More money equals more problems, but people really don't see that issue, right? It is always more money, more problems. That analogy is really important. They have to find a way to park this money somewhere, and they don't know where to park it. And at the same time, they're also allowing these hedge funds or these players in the game to continue to borrow, take it from them and use it to do other negative things for the retail investor. And that's a big piece that it may not have direct impact, right, Sharkbait, but it does have kind of an indirect impact to our stonks that we follow. Not just market-wide, but specifically GME itself, because it's primed. It has been primed for so long, and The kick in the can down the road only makes the bubble, the water balloon, much bigger. After some time, after some point, right? It's going to be too heavy to hold, and it's going to burst.
Right, exactly. And so I guess this sort of starts to segue us into the T+21 type of conversation and everything that we've seen about that as well, and what kind of game of hot potato is really taking place in the financial world. So Bracha, I know that you had done a little bit of digging around T+21 as well. And this is kind of brings in Butt Farm here as well, because we see a lot of shit posting taking place from Ryan Cohen, and somehow some people have started to figure out like maybe there's a correlation between those two. Has Ryan Cohen figured out the T+21 cycle? Does he believe the same thing that we believe in this regard? Do you have any thoughts on that?
The timing is really strange. I haven't looked into it enough, but I've seen some other posts that definitely make it seem odd. And I honestly don't really understand the T21, but it's definitely a thing. We've seen it. We saw it clearly a few weeks ago, and Ryan Cohen did that great, what was it, an American Dad tweet, I think, the shorts in the swimming pool. And we went on that incredible run recently. I guess it's the third big one up to 350. And yeah, it could be coincidence, but it seems like odd timing. It's happened multiple times now. So I don't know how we would both be on the same track there. We don't even really understand what T21 is, or at least I don't. Maybe I haven't got the full grasp of it. But there's something there, and it's pretty funny to see these tweets come out and decode them. And I did enjoy one earlier today.
Yeah, I mean, it's a good question, right? Like in general, like T+21 and what that represents. So as we've come to understand, is that it does have to do with the failure to delivers, and it seems to be cyclical in nature, right? So after the January pop, I mean, there was a lot of people who had assumed that it was over, right? That was the squeeze, like it's all said and done. But then out of nowhere, as we progress through February and then March, we're seeing that the price is just spiking randomly, right? And I think that's kind of what started adding into this T+21 theory. And I believe it was Home Depot Hank, I think, who initially started doing that research around T+21, which was then further advanced by Cryant. If I'm remembering this correctly, maybe I'm wrong. So Red, I think we have one more link there that I had posted just under the T+21. This image right here. So this shows a little bit more detail what the T+21 day cycle has looked so far. And I was hoping to maybe have a little bit of a discussion about this. So this is from Cryon directly. And basically, there's this kind of insinuation here that we're seeing these big movements, these coverings, take place every so often. So as we had seen, we had the first really big one, which took place on January 25th. Sorry, I guess that would be the second one. But the first one would have been even prior to 2021. And I remember that specific moment too, because funny enough, I was actually investing in GME back in November. And it wasn't nowhere near the same hype that we see it now. But even back then, there was already a lot of these conversations taking place as to these potential pop-ups in price. Now, naively, in my opinion, I had thought that it had something to do with Q4 results, that obviously it was a new console cycle and people were very bullish about that. But as we kind of come along here, we started to understand that there's something more to this story. Right? And even when you look between February 24th and March 25th, a lot has been going on. Does anybody have any thoughts on this?
I think it's going to be fascinating when this is all over, like 10 years from now, and we get like a Big Short type movie that talks about all of this and gives us an entirely like in-depth analysis of it. Definitely for the time being, I'm way too dumb to go into any of this stuff, but I am interested to see how it all ends up turning out in the end.
Yeah, so Bufffarm, actually a good question for you, right? So as the resident shit poster here, what do you think of Ryan Cohen's tweets? Is there something more hidden in these messages, or is he just trying to tip us off on the timing, do you think?
I think it's very interesting for sure that that he manages to tweet the day before a lot of the T+21 cycles. I don't know. Obviously, it's all speculation on whether or not he is doing that purposefully, but just the fact that he doesn't tweet every single day, or even like really that often for that matter. Like if you start scrolling through his Twitter feed, you can pretty much get to the end of it within a minute. It's not that long at all. And so the statistic like anomalies that could be a part of it is just so low. Like he has to know something. But I just love it. Oh man, the fact that he is just like posting farts and basically taking down the world's hedge funds, I think that is just so chef's kiss, baby. Chef's fucking kiss. Oh, can I swear?
Yeah, you could totally swear. I mean, we're scrolling through RC's Twitter. Let's be serious.
Oh God. I'm like, oh God, the children.
Yeah, so I mean, like he posts funny stuff, right? And like it's so unconventional. It's so outside of what we would expect of a CEO. I love it, right? I think that he is definitely somebody who's trying to appeal to all of us, to the apes, and you know, we love it, right? Like we think it's absolutely hilarious. But I am curious to see if there is something more hidden behind it. I remember watching an interview or reading, it was like a quote from Ken Griffin, and it was in regards to the ice cream tweet, that McDonald's ice cream. And you could tell that Ken was like, he was kind of pissed about this, right? He's like, they're going to be reading about this in history books as to how a picture of an ice cream cone affects stocks, right? and he's totally right about that.
Yeah, I remember that. It's hilarious.
And it's
in
like
the Financial Times, I think, if I remember right. Yeah.
Yeah, sorry,
really
go ahead.
Weird. Oh, sorry, I jumped in. I remember that a few months ago too. I think it was in the Financial Times, and that part of the article was really bizarre. And I think it's going to be interesting to see how this all plays out, and how, we'll understand it in the future. I think, as Butt Farm says. We'll have to see.
Yeah. The ice cream tweet was also, oh man, it lit off so much news. Like it was all over CNBC. Like I remember Kramer was having a meltdown about it. He was like, "Why is the stock going up because of an ice cream tweet? I don't get it, guys." And we're just like, dude, it's shit posting, man. Get with the program.
And I think that's what it is, right? Like, it's just like him literally shit posting. He's like, RC is like the king shit poster. What was it like to have your picture tweeted out by RC?
Oh my God. I still haven't completely like gotten used to the idea yet. Like every day when I wake up and I see like somebody having a fucking chairman picture somewhere, I'm just like, what the hell is this? Like, I can't believe that I created this, and I'm still starstruck to this day. And definitely like the day that Keith Gill also tweeted it, I was just like, what is going on? Like, we're living in a simulation. And like the Market Watch article, like that said Butt Farm 69, I was just, oh my God, what is, I don't understand what's going on. Is this real life?
That's the part that amuses me the most out of all of it, is the fact that while different mainstream media have to write articles about what's going on, is that they have to write down all these usernames that are like totally outlandish. And it's like, these are the people we're losing to. Yeah, I love it. Oh, it's so good.
I also love Stonkinator 3000's quote where it's like, you'll have to pry my GME shares from my cold dead hands. Oh my God, that was so legendary, dude.
Yep, that's right. And I feel like that's exactly the nature of all this, right? Is that we're at a point where people have gotten so Zen mode and are not being shaken. I feel like it's like a dog that's not going to let go of a bone at this point. And I love that fact, right? It's just like people have reasons to hold. People have read their DD. They've done all the research, and you know, they feel comfortable. And I think that it's at this point that like we've reached this point of like comfort and Zen. You know, things will start happening, hopefully. So at least in my opinion, I think that it's a good thing that we have reasons to hold for what we're seeing. So with that being said, let's go ahead and move into the next topic really quickly. So we have about 25 minutes left here. So I don't want to make sure we dwell too long on one single thing. But the next thing that I wanted to chat about was regards to the mortgages and the housing market in general. I know it's like not directly related to GameStop here directly, but I think it's important to know because in relation to those reverse repos that we were talking about earlier, is that we're seeing that there's some sort of collateral problems taking place. Kenna, did you want to maybe just maybe cover us very, very slightly here a little bit more about the housing market and kind of what we're seeing from a broader perspective?
Yeah, so I mean, we had the thing with Freddie Mac and Fannie Mae. My husband definitely did a great job with a DD that he typed up today about it. And I'll cross post that over to Superstonks if you guys want me to. Kind of going over what happened with '08, them taking this massive bailout. Like they got like between the two, they had 200 billion between the two, and they basically got owned by the government. So they've been really like taking advantage of that, and they were supposed to like do a percentage back pay, and they ended up just taking full profit. They overpaid by over $100 million, and now that's why this whole big lawsuit came out. Or 100 billion, sorry. It's absolutely astronomical what they did. And this is what kind of goes into like the preferred share aspect of the stock market and everything. Like if you have preferred stock in anything, you basically have full ownership. And that's what we see with, AMC and GameStop and any of these other meme stocks. People that have the preferred stocks or whatnot are in control. And so with the housing market in itself, like we have that major catastrophe happening at the moment. And then you have, gosh, June 30th is a big date here in the States, having the mortgage and rental memorandums coming due. So certain people that haven't had it already put into their contracts where they could have all of those payments pushed to the end of their loan, they might be seeing a big balloon payment come up. And roughly in the States, you have 250 or $2,500 is your average mortgage payment. Rent is about the same, so you're looking at 45,000, give or take a few months if you haven't paid your rent or mortgage for the last 16, 18 months. And so that gets a little troublesome for people that won't be able to cover that. So we could see a lot of foreclosures coming. We know Blackstone, BlackRock are already buying up suburban areas. They're buying up entire like little suburban neighborhoods and everything, and that's pricing people out. The lower income and middle income households are getting priced out of housing, and that's completely destroying any idea of home ownership for a lot of the millennials, Gen Xers, and even some of the Gen Zers that are coming up and trying to buy a house. And the rhetoric that we keep seeing is you'll be happy when you'll be happier that you don't own a house, and renting's the way to go, is kind of the rhetoric we keep seeing popping up as we're doing our research in the housing industry.
Yeah, absolutely. I think Red just brought this up. So this was posted on Superstonk the other day, and it just goes to show how much of an impact the government can have when they just make these decisions on the overall market. And so I mean, like you have all of these different mortgage associations, and you see the losses that they incurred over the last like day, right? It's like some of these are huge negatives.
Yeah.
And so, sorry, go ahead.
I was gonna say it's so the let me find his name. When the president actually took down the main guy, I can't think of his name right now. Give me one sec.
Yeah, forget his name now.
I forgot his name. I'm sorry, guys. I'll have to get back to you on that. This is all brand new stuff that we're trying to kind of dig up, but he basically wanted to Calabria, that's what his name is, wanted to take Freddie Mac and Fannie Mae, and he wanted to get them away from the government control. They wanted them to be privatized institutions again. And he was actually supposed to be a pretty good person for this whole situation. Now that he might, from a shareholder standpoint, that's a bad thing that they took him down, because it seems like the Supreme Court, the government, is wanting to keep these two entities as government controlled because, well, they look like cash cows, right? They're bringing in money. They're able to pay $100 billion over their loan purposes from '08. That's astronomical. And so from a shareholder standpoint, that you're saying heck no. And so they're going to start bailing out of this. They're like, no, we're not, they haven't seen $5 a share since 2008. That's disgusting. Like, I mean, could you
Right.
guys imagine holding a stock for that long and not seeing over $5? Like, oh gosh. So yeah, I would assume that we're not done seeing the bleeding out of this just yet, for sure.
Yeah, and I feel like that's the ongoing trend with all of this, right? By the way, if anybody else's Reddit is down, I think that they're just having server issues, just as a heads up. We're having difficulty loading up some links here as well, so don't be alarmed. I'm sure it'll be back up shortly. So, I mean, yeah, the housing market, however, it's becoming very complicated. And I feel like in relation, if you start comparing this back to 2008, and I feel like this is how I have these discussions with people who are not familiar with what's going on, is that you try to pull it back and give examples of like what happened back during the recession, a little over a decade ago now. And I find that there is some similarities, especially in regards to the housing market, but in some ways it's also very different. Right, is that we had seen that there was a lot of liquidity problems before, which for anybody who's not familiar is like just having too much or not enough cash on hand. And now we're almost seeing that inverse of this problem where there's a little bit too much money. And it's a little bit of a funny concept, but for anybody who's not familiar, is that there's these SLR exemptions that were instated for the different financial institutions and banks. And basically that allowed them to leverage as many securities as they needed without really having anything on hand. Like they didn't have to be safeguarded in any way. Like they didn't have to have collateral on hand to pay for that.
So let me add a point to what you're saying here. SLR, or supplemental leverage ratio. It's in a way, it's like a get out of jail free card, but from a perspective of like a margin account you might have in your broker, right? You can borrow as much as you want and as much as you may potentially even think you never want. You could continue borrowing and asking, and it allows you to basically have excess amount of money in your account or in your pockets. And this exactly what you're saying is the SLR situation with the banks is so severe. It's gotten to a level where you can only go up to maybe 8 to 9 times above your bottom balance or status quo or equilibrium. And some of these institutions, financial institutions, banks, are 10 to 15 to 20 times over, which should be alarming to a lot of people, meaning that they have so much extra cash sitting that it's not funny. That means the value of that cash or that paper currency, the fiat, is sort of getting to a point where it's potentially worthless.
Right. Yeah, I feel like it's getting to a risky situation, and the cash has basically been dumped everywhere, right? And so I mean, like we've seen it dumped in crypto, we've seen it dumped in treasury securities, we've seen it dumped into the stock market. I mean, hell, look, we don't have to go looking too far, right? Have a look at SPY, have a look at NASDAQ. Like these are hitting all-time highs that they've never hit before.
Yeah, and that's actually that's a big concern when you look at trends and everything, like the historical charts that I've pulled up and done my DD on, and those like the fact that you're seeing these all-time highs when you have these certain crossovers that have actually been trends of indicating crashes or any kind of correction, actually, it's concerning. In the fact, like, are they trying to basically pad it in a sense that, okay, maybe it'll soften the blow of if it does tank or anything, and then it's like they're also we're starting to see it in the real estate industry too. And so it is really kind of concerning that we are seeing these massive bull runs with the NASDAQ, the Dow, and the S&P 500. And then you look at the back end of it all and you look at the put options and the call options, and there's still people betting against it. So it's kind of terrifying, at least in my opinion.
I want to bring it back to your point, though, Clark, when you talked about just this whole piece about excess liquidity and what happened in '08 is different than now. It's different because there's more money now, way more money now in the market. Like we've printed 40% more money since last year into the market right now. Think about that. Just think about it. Pause and think about it. New bills, 40% more new bills printed since the circulation since last year. Last year we were supposed to be in a potential depression, right? Some regression happening, and didn't happen. And so, what Ken just said and what you're saying, like we're still in a bull market. We are very much in a bull. Like we were in a bull market last year. We've gone to a super bull market. Now we're going to an extremely super bull market. Like we're going to heights that doesn't make no sense. Valuation of companies don't make sense. Tesla is one perfect example, right? They sell thousands of units versus you have established car companies that sell, millions of units. Yet it's the opposite. Tesla's worth way more than that.
It's funny because Tesla very little talked about, but I feel like is an important part of what we're seeing now as well, to understand the history of short interest percentage in general and what takes place after that. So similarly, I had been investing in Tesla back in like 2018, 2019 or something, and they ended up getting a really nice write-up. At the time, I wasn't really familiar with this concept of like naked shorting and what the effect of on the stock that is. It's because it never really took place. I mean, it was such a high short interest percentage, and clearly they didn't bankrupt Tesla because Tesla is still here to this day. But it's crazy because at the time, Tesla had only reached a high of 30% short interest, right? So imagine that it drove up. No pun intended. It drove up from the price that it was previously, which was like $500, $600 pre-split, right? It went up to like $3,000 or something, split, and now it's gone back up, right? So it's kind of crazy to think about its progression in the sense that there doesn't seem like anything's stopping the stock. But the crazier part to me was that it was on such a small short interest percentage to begin with.
I was just going to mention that. Correlate that to GME. GME is 4.5x Tesla short interest. 30% times at one point 140 to 150% short interest, which is the maximum you can calculate or is allowed to be put into a system, right? It's unfathomable. Yet, what happened with our situation, GME situation? It was the plug was pulled, no pun intended, unlike Tesla.
Yeah, I totally agree with that, right? So I mean, like you think about GME from the same regard, and like there's a reason, and Dr. Burry has made a reappearance, as some people had noted. Then he went off of Twitter, then he's come back into Twitter, so he's on off. But the crazy part is that back when Dr. Burry had noticed what was going on with the GameStop, he made a quote saying that there would never be another GME. I do want to point out, like Dr. Burry has posted some pretty controversial thoughts in the last little while. It's hard to say what exactly he's getting at. We're not going to touch on this too much because it does get very political very quickly, I feel. But he is alluding to kind of this bigger market bubble, right? And bulls getting trapped. So it's a little bit interesting to me in that regard as to what might be taking place. Dr. Burry already having a pretty good reputation in predicting these kinds of market collapses. It is concerning that he's alluding to something similar again. Of course, at the same time, a lot of people have, just to be equal here on both ends, a lot of people have pointed out that he does have short positions on the economy. Like, is he being biased? It's not our place to say, right? We can only look at the evidence as well and make our own opinions based off of that. So.
And keep in mind he became the 1% after shorting the whole thing in 08, right? So he's used the tactics of shorting before. Sometimes it's just smart investing at the end of the day. He's shorting the U.S. Treasury bills, so he's clearly seeing a massive inflation event coming up here, right? So you can't knock him for playing the market. The games, they make the rules. They got to play the game, right?
But yeah, he also made points. He's called it. Like, he's actually called stuff way ahead of time, right? Clear that it just doesn't any normal person wouldn't be able to do that. But he's done it multiple times, and he keeps giving us these hints. So I think it's valid to kind of see what he's saying, validate exactly what he's saying, but it's also valid that he's saying these things because he knows something is up, purely based on the treasury bill shorting that he's doing, which is pretty brilliant in my mind.
I mean, we can see it all through the market, really. I mean, if you just take a step back and look at the broad spectrum at how the economy is shaping up and take into account 2020 and how much money they printed there, I mean, you could almost see it. I mean, anyone that actually is, like, just takes a look at charts and the economy as a whole, you could actually see exactly what Dr. Burry is doing. And I mean, heck, even our team found all the shorts on the treasury bonds and how they're using treasury bonds. They're being reckless with all of the different financial sectors of the country. It's completely asinine, in my opinion.
Can I, oh, sorry to jump in.
Yeah, please go ahead.
Can I take the conversation back to GME short interest for just a sec?
Yes, absolutely.
So, like, I've looked at short interest back probably to like the start of 2020, and for GME it was like over 100% for all of 2020, basically. Like, it bounced up a bit and down. This is reported, but it was over 100% for the whole year, which is just bonkers. And as I think the Indian dude said, like 140% is probably the max they can actually report. So who knows what was actually going on. And then, so if you see my post, my belief of what happened in January is that they shifted their short problem into an FTD problem. And then that's why I think we have this T+21. I don't know, I don't understand all the SLD deadlines and blah, blah, blah. But I think because they've now shifted to this FTD problem, that's why we've seen some of this craziness in the last months. And there's a user I want to give a shout out to. He's called Get It Got. He did a post about a week ago where he started this project to run a randomized survey on the US population.
Yes, I've seen this, yep.
I mean, so I'll just cover it very briefly. He's basically gone onto Google Analytics and created a short survey where he wants to sample just random Americans that are online, different age ranges across the country, you know, basic demographics, and just see how many of them have heard about GME, hold GME, if they hold it, how many shares they have. And he's getting more data in, but his current estimates, what do I have down? Currently, his estimates are that US apes hold 180 million shares. And he's being conservative there because he's saying things like most people live in multiple people households. So like if you have a wife, like he's saying that you would add up both of your shares, things like this. And he does some other corrections, but he's estimating 180 million shares just in the US alone. And there's can be other problems with this online polling because, you know, you're only polling people online. And
yeah, like there's of course shortcomings, right? So for just to kind of recap what Brock is saying is that this other user, they basically set up a Google survey. So sometimes you'll see them around online. Sometimes you have even on YouTube, right? You'll see it's like, oh, have you seen an ad for any one of these? It's kind of like these brand lift studies. You can pay for some of these surveys as well. But ultimately what they're used for is to try to get some sort of sentiment or opinion of the broader market. So Google tries to do their best and they give you statistical significance and polling as many different kinds of people as possible. Because of course, you know, I don't want to make this political in any sense, but, you know, of course, we're going to have certain areas vote a certain way, right? So obviously, if you ask just that one single area, who do you think is going to be president or who are you going to vote for? We're going to have a very biased sample, right, from that one specific location. So the great thing about Google service is that they try to get a broad range of different people with different opinions. So then the only other part of that then is important is that you reach a number of statistical significance. So it's just ensuring that you have polled enough people, which I think was the only shortcoming as of that original post. But I think he was running more surveys after that, if I'm not mistaken.
Yeah, that's a great summary. Thanks for that. I think he had about 700 surveys, and he's going to get up to about 1,000. I'm not sure the details, but it's just interesting to point out. I thought it was quite striking, the numbers. And even if you were to say that you accept there's some biases and the number is an overestimate, it's an obscene amount of shares. It definitely doesn't line up with the official reported numbers, let's just say. The 20% that apparently
and like this is kind of like the big statement here that I wanted to make. So with regards to the short interest percentage, this really depends on what you're looking at and which data source, which, as we know, has been fraudulent to some extent on different sources. But if you look at, for example, FINRA short interest percentage, which is fed to them by Morningstar, we start to see that the short interest percentage, and I'll provide a link for this as well for anybody who's interested on my Twitter, but you can look and you can see that the short interest percentage for GME prior to 2020 had reached that 1.310%, right? And that was just from what was being reported, right? So once again, it's if we trust FINRA and Morningstar, then that's fine. But it's the reality that they had achieved such a high short interest percentage that's almost unfathomable. And it begs the question, how do you dig yourself out of that hole, right? Like, how do you cover shares that don't exist? And so this is the question we've all been asking, right? And it's a difficult question to answer because we're not really sure. But we know that it's impossible because the shares that they would require, they don't exist. So that's
they exist in our brokerage accounts.
Sorry, can you say that again?
They exist in our brokerage accounts.
Yeah,
and they have to make us sell.
That's exactly it. Is that it is assumed that we have been given an IOU to say that, which isn't your problem. Like, it doesn't matter. Like, to you, this is, you paid for it cash. That your share that you have in your account is king, right? Like you bought it. But the one thing that is worth noting is that then, like, whoever the broker was that issued you that is going to be on the hook to actually finding it for you, right? Is to give you the real thing and then respect the value of it. So who knows what this ends up looking like? I'm like, MOAS happens and the banks are like, oh yeah, we screwed up. We're gonna have like a repayment plan for you over the next year as we pay out your millions of tendies, right? But like, that would be still the dream here, right? Let's be serious. But I think that we'll see what ends up happening. And for us right now is that we've been buying and holding, and I think that that's been a strong strategy. And I don't think that really needs to change. Like, that's the core message of everything. And I'm like, I don't feel like I'm getting tired or bored. I had seen a lot of posts like that. I find like I'm still very much here. I'm excited, and it seems like every day there's something new. So.
Yeah, and the key thing with that too, just that is just patience, right? And Warren Buffett, one of the most OG diamond hand motherfuckers in the market ever, he says that patience rewards those in the market, right? And all we have to do is be patient. We don't have to do anything, guys. We just sit back and wait, and wait for the DD and information to flow and see what happens, right? That's it.
Yes, yeah. So the last final thing that I wanted to bring up here was in regards to, I know we already had chatted about it a few times, but regards to the reverse repo market. So Red, if you want to pull up that chart, there it is. So I think this puts into perspective, right, as to like what we're headed towards. We see this like it's the sharp incline, right, that this mountain just formed out of nowhere. And these are basically the treasury securities that the Federal Reserve is issuing in exchange for cash. Now, this is a kind of a funny thought, but we know that the banks basically, they don't want to be holding on to cash, so they want to exchange it for something. Something that I did want to mention is that at quarter end, which is taking place in a couple of days from now, is that by quarter end, if you notice the trend along this graph, is that on the very last day, we see almost like a 2x spike. This is kind of crazy. I can't even imagine it. But if we're already at 813 billion and we have a 2x spike at the last day of the quarter, we're going to be well into the trillions, right? Like almost 2 trillion at that point. So I'm genuinely curious to see what happens with this. Is this going to damage some players? What are they going to dump their cash into after being capped out? So for anybody who does not know, the cap on the reverse repo market is 80 billion per participant. Even the participation numbers have hit all-time highs. I believe they're currently at, if I just open up the link here really quickly. As of today, we got to 75 participants, different parties. This is a huge amount, right? So it means that there was some sort of demand. So it's just something to keep an eye forward to. I would also like to say that we'll see what 002 ends up being. I think this is going to become potentially. I don't know if it's going to have an immediate impact, but that's just my opinion. I think that it's going to be draining cash slowly or creating this like risk factor, and I think that it's ultimately going to be a part of what maybe helps apes at the end of the day here once enough cash has been pulled out of the system. But only time will tell. Does anybody have any other final comments before we close out here for today?
I just want to give a shout out to Rick of Spades and rest in peace to the banana.
So yeah, Rick of Spades, we've been actively discouraging any sort of those kind of posts.
Yeah, I'll chime in here. I'll chime in here because I was actually the one that was the first moderator to see that, I guess is the way that I'll put that. And as much as it broke my heart to break everyone's heart and remove it, we had to. So sorry.
It's like the meme that won't die, right? So like we actively tried to like remove any mention of it. It's like, all right, we should probably not encourage people to put things in their body, okay? But it still kept coming back. It's like it's notorious at this point. Too funny.
I just want to thank you guys for having us all on. I mean, it's definitely, I'm happy to see that more people are looking at broad market because I think that is the next thing to really keep our eye on because it's all intertwined. The more I dive into it, it is definitely becoming prevalent that the bubbles are all inside of each other, and we have to kind of keep our wits about us on what is all at play right now, because if we just tunnel focus on GME or AMC or just the meme stocks themselves, we might get blindsided.
Yeah, I think that's important, right? Is that ultimately, and I think I've kind of said this in the last monkey business as well, is that we just have to remember that there's a financial war being fought, right? Like across everything, across SPY, across Tesla, across Amazon, you name it, there's a big fight taking place. You can find this out by looking at Whale Wisdom or Fintel and look at what's going on with Citadel. Let's look what's going on with BlackRock and look how many different parts of the market they're all scattered across. There's all these like little battles taking place everywhere. And GME is one of them, right? Personally, in my opinion, I think GME is the kill shot. I think that that's kind of like the final nail in the coffin because of how high the short interest got to. But only time will tell. So once again, I think patience is key here, just to reiterate what we've already heard. And to echo Ryan Cohen is that, stay buckled in and hopefully we'll enjoy this rocket ship ride. So thank you very, very much for joining me today. I think it was really interesting to cover everything, and we'll see what the next week brings.
And just want to add that Reddit looks like it's still down. So
okay.
But thanks
for having us.
Bye, guys.
Cheers, guys. Buckle up, apes.
Thank you, everybody. Yeah, buckle up.
Thanks, guys.